Good morning, everybody. Welcome to the Loan Officer Breakfast Club. Wow, March 19th, 2026. We are ripping through. Chris Johnstone's in the house as well. Good morning, brother. Oh, my gosh. Look at this guy with his sweatshirt, Owen Lee here. All right, we're going to have a great day today. Wake us up in the chat, my friends.
Baby.
Wake us up in the chat. Let us know where you are, how you doing, that kind of thing. Say good morning to us, man. We want to say good morning to you guys as well. Man, oh man. Yesterday. What was yesterday like for people? I wonder. Hey, Kristen, how did we do on your end yesterday? Things go well for you after Breakfast Club? Get a lot done?
Yeah, I did. I had a great day. I got a lot done. And you know what? I forgot to remind you this in the green room because you were so fixated on your sound this morning, but it is flux capacitor day.
Oh, it is okay.
No,
well, thank you for the reminder.
Right?
Wait, what is today?
Today's Thursday.
We missed it.
Crap. Okay, so that's what I meant to say. We missed flux capacitor
How did we miss
yesterday.
It? Why did we miss it yesterday?
We have a makeup today. We're all, you know what it is? I think we're all just focused on March Madness and Nova, Villanova today. That
you think that's what it is?
Yeah.
I don't know about that, but
I just got to see, what is this all about?
How many gigawatts was it? 121 gigawatts into the flux capacitor?
Something like that. Something like that. You're not.
Of course, you remember that.
You're not usually here when we do flux capacitor on Wednesdays. Oh, and so, Frank, tell them do you know what the flux capacitor situation is?
Yeah. You know what we do? So it's basically how much capacitance is left in the year.
Okay.
You know what I mean? Like, yeah.
Right.
So, Justine, let's figure it out for today. Even though we're a day behind, there's the flux capacitor. So the flux capacitor is officially in the chat. So it's there. And then let's look at Justine. You can figure it out. You know the math.
I've got it here. It's 78.6%.
Wow, 78%.
Down to the 70s.
We got a 7 in the front. Man, we had Chris Johnstone. It's like we're just falling off a cliff almost. You know what I mean? It's just like we're just. It's
we
something,
got more
man.
than 3/4 of the year to go.
Oh, yeah, that's a good way to look at it. Owen Lee, of course.
Mm-hmm.
Half full. Yeah.
Every day.
That's right. 3/4 full. Three-quarters full.
Not a quarter empty, but 3/4. Really, it's 78. So it's more like 20%, more like 80. You know, if we're gonna.
It got to round up. Yeah, 100%.
Yeah.
You know, I'd love to know as we're like sort of getting towards the end of Q1, which is hard to believe, of 2026 already. I'd love to know, what do you guys think? Should we do like maybe next week or the following week a little Q1 wrap up so we can reassess and make sure we're at our goals? What do you think?
That's amazing.
It's a good idea.
That's a great
idea.
All right, all right, Frank. I
told her to say that. Yeah, go ahead.
I nominate you.
You nominate me. Okay, great. No problem. I got it. I got you.
That'll be super interesting though, because it's the activities and the goals that we set in December that we started.
Yeah.
Like it's 90 days ago that's going to show up on the scorecard for today, which is going to be super interesting to see how everybody started the year and the market that we've had. It's going to be great. I'm excited for that.
Well, let's do that.
Yeah, and still, and if you're not on track, right, for your target, you still have 76% of the year to reassess and figure out what activity do we need to do to get ourselves at the right pace, which is more than likely the DSP. But
if you're not on target, today's the best day to start.
There you go.
On target.
That's a good way to look at it. Yeah, indeed. Indeed.
It's amazing how many questions the DSP answers.
Yeah.
All roads lead to the DSP.
It's so true.
It's biblical. It's biblical.
It's biblical. Wonderful, wonderful, wonderful. Hey, let's grab a win from somebody. Who should we pick on? I'm going to say, Justine, look around the room and pick on somebody. So, don't you be turning off your cameras, people. Don't be turning off your camera. Don't be turning. I'm not going to influence you in any way whatsoever. I'm not going to influence you in any way on who to call on at all. I'm not. But
I was thinking Vince Queen because I saw him on Call Stars yesterday. So
okay, Vince Queen, good choice. I don't know how you came up with that, but great choice. Vince Queen, come on, man, give us something good about yesterday or this week so far. What's happening?
I got two new referrals, not two referrals.
Nice.
I got two new refinances because I've been really targeted in on that. So I got two new VA IRRRLs.
No
That's
kidding.
been my focus. So I got two more yesterday.
Nice, dude. That's fantastic.
Calling past clients.
Wonderful. Absolutely wonderful. And those are, from what I understand, those are like really, really hard loans to get done, those VA IRRRLs, right? Like they're super complicated.
Absolutely not.
I know, it's like, what's your name? Approved. Sign your docs. Yeah, get some. Great job, man. Excellent work. Yeah, the refi. Did you save them a lot, or on the rate, or how'd that shape up, or what was it?
The company I work for, that some guy named Owen Lee runs.
Has some part in it.
With.
Yeah.
The company you work with.
Well, the company I work with. Thank you for changing that. But we actually have a refi special going on. And most of I'm getting people to take advantage of it. So
nice.
And it's working out just fine. So yeah, it's easy to sell because if you're saving somebody $300 to $400 a month, they're always interested in that. So.
Absolutely. Wow. Good stuff. Thank you, brother. Appreciate you, Vince.
That's
awesome.
I'm a big believer. We work with our companies, but we work for ourselves and our families.
Yes, that's right.
Wonderful. Wonderful.
I'm just
so you got
I'll never let it happen again.
The refi special is fantastic. We compete with servicers every single day on rate, on term. It's a hell of a program. We've written over $250 million of loans on it. It's fantastic.
Yeah. Wow. Let's talk to Sean.
I was just gonna say, are you reading this? Are you reading
Sean?
This?
Oh, you got to unmute, brother. Give us the goods.
Thank you so much, Mr. Frank, for all the great things you do in this great group.
Awesome. Thank you.
Yeah, you kind of drive my energy every day, and it's been win for us. But yesterday was incredible. We closed on 10 rental loans in Ohio for one client, closed on one DSCR in Chicago, another fix and flip in Chicago. And right now we have 8 deals in the pipeline with 3 contracts that came in this morning. Thank you so much.
Thank you so much. Congratulations.
I'm not yet in the MLO space, but someday when I get there, I'm sure I'm going to be part of mortgage marketing animals. Then thank you so much.
You got it, man. You're good stuff. Congrats. You're getting a t-shirt, my friend. He needs a t-shirt. Let's get him a t-shirt. Yeah.
Frank, we should just wrap it up. Put Sean on loop for 22 minutes and we can all go home.
Hey, Sean, where you located? Where you at?
I'm in Zionsville, Indiana.
Indiana.
Yeah.
Right.
Yeah.
Awesome. Well, great stuff. Great work to everybody. Vince, too. Just congrats on everything, man. Good stuff. Well, heck, man. Well, we're here. I think we've come to that time in the program where it's like, we got to bring on Mr. Owen Lee with the mortgage market update. Can't wait to hear what's going on, man.
This is a great week, Frank. An absolute great week. I didn't know what to do. 2 days ago, St. Patrick's Day, one of my high holy days of the year. I didn't know whether to rep St. Patrick's Day, but we got March Madness going on today. My team's in it for the first time since 2022. So we've been outside the bubble for the last 3 years, but we're back in this year. So I'm pretty excited about it. I don't know that we'll do very well, but it's just exciting. You got a chance. You got a lottery ticket. So
nice.
And it's the first time we've played in the tournament since a certain alumni of ours got a new job in Rome as the Pope. So we might have some saints sitting on our sidelines. I don't know how that works, but we'll see. At noon tomorrow. So, awesome. But it's going to be tough. Going to be tough to top Sean. That was really 10 closings, DSCR, 8 new deals in the pipe. Way to go, my friend. I think you win the week. Congratulations.
Good stuff.
So,
wonderful. And a big portfolio deal. That's cool. 10 property portfolio deal. That's neat. Yeah.
It works. The daily success plan, get it as a part of your life, and you'll be cashing more commission checks. So why don't we get to our slides? yesterday was a Fed meeting day. We had Jerome Powell. Probably the biggest news that came out of the Jerome Powell press conference, everybody knows there's uncertainty around the Fed. He kind of intimated that we'd still have one cut later in the year, so that was good news for the market, but mostly it's just a wait and see approach. We talked about this last week. Not much has changed in the past 5 days. We're still waiting on what's going to happen with the war. Another thing that he kind of intimated was that he was going to hold on to the chairmanship until the new chairman was confirmed. The new Fed chair is supposed to be confirmed in May. Currently, that's on hold because there's a singular senator, Tom Tillis from North Carolina, that's blocking the confirmation process because Senator Tillis is upset that the DOJ is investigating the Fed for cost overruns on the building, and it's typical Washington, D.C. mess. But let's go to the next slide and look at just kind of how the market actually did yesterday. I think the next slide, if you look at it, we took a little dive yesterday, about 20 basis points towards the end of the day. I've got both UMBS and oil on this slide. Thought it was interesting. The purple line is oil, and the blue line is mortgage-backed securities. So you can kind of see where we were pre-Iran, right? If you just look toward the left-hand side is the last couple of 10 days of February. And where we were riding, we had oil in the mid-60s, and MBS was higher, which means rates are lower. And then, of course, the war happened, and they just kind of flipped. And so we're going to see this for a while. What we talked about, the Straits of Hormuz having to be open, something like 22% of the world's oil passes through that 2.1-mile strait, and we need that. So this is just kind of an interesting way to think about it, but you can literally see, 6 tankers make it through the strait, and the market gains 35 basis points. That was Monday. Tuesday, we gained another 22. There was a bombing. We lost 22. It's just going to be up and down for the next 2 to 4 weeks till we get some clarity. So that is something that we're going to see. But I just thought this was like an interesting way to take a look at it and see how the two cross. So we hit the next slide. So this obviously uptick in interest rates has had an effect on mortgage demand, mostly on the refinance side. This is an article about the MBA's latest weekly survey on mortgage origination. See, it went down about 11%, rates about 20 basis point higher in rate. The market's lost about 100 basis points. That equals about a quarter in rate. So that caused a little bit of a reversal in refinance activity, especially for conventional, because conventional rates have been more effective than government. Interestingly, if you look at the last paragraph, purchase applications remain steady despite higher rates, with growth in the government area in FHA and VA. So the spring market, normal supply and demand needs are trumping what's happening in the oil and the MBS markets right now. So stay on your realtors, stay on your pre-approved and lookings. In some areas you can get seller concessions to cover the increase in interest rates, especially in the Southeast and the Middle West, Texas, and some areas of California. If you're in the Midwest or the Northeast, the market's still a little bit tight. That might not be available, but the purchases are still happening. We're just going to live in an up and down world, but persistence is what beats the up and down, and it positions you well for 2 or 3 or 4 or 5 weeks from now when we get some more clarity on this market situation. So that's just something you've got to keep fighting through, and something that we got to keep working on. So you're well positioned. We talk about it a lot. These refis, the periods of low interest rates, they're a series of sprints. You never know when the starting gun is going to go off, and you got to be ready. And you got to be doing your work like Sean's doing his work. So just one last thing I wanted to cover. Let's see. Here's a good representation of the purchase applications. You can see we're still running about 13, 14% if you look at the numbers on the left-hand side above purchase demand from last year. I would expect this trend to continue and then potentially get even bigger towards the second half of the year. Remember, even though we've gone up about 25 basis points in rate, we're still about 3/4 less in rate than we were in 12 months ago. And I'd much rather be selling a 6.25-ish rate than I would a 7% rate. So that's a lot better than it was last year. So if you're a little bit discouraged, you have a little bit of hesitancy, if one or two of your people has dropped out because of the fluctuation in interest rates, pounding it, because we're doing better than we were last year. And that's market-wide, and that's even with what's going on in Iran. So let's see. I've just got one more thing to share, which is kind of cool. So I won't be able to be with you guys next Thursday. I don't know. I'm talking to Frank. There might be another slot available, but I'm going to be testifying in front of Congress next Thursday, which is kind of cool. There's a piece of legislation called the Veterans Assistance for Loan Origination Relief Act. And for those of you that write a lot of VA loans, you'll be very interested in it. What it does is it tries to get greater relief on the mortgage insurance premium for veterans who have been discharged and judged with at least a 70% disability. And it tries to eliminate the mortgage insurance and keep that low and lower it. The problem is the current legislation that's moving through Congress, they want to pay for it by taking money from other veterans programs and other areas of the VA home loan program. And we at the MBA and people in the industry would rather see them spend some additional money and invest some additional money into the program, because the VA home loan program's been wildly successful for 6 or 7 decades since it started shortly after World War II. So I'm going to be testifying on behalf of the MBA next Thursday in front of Congress. And so anybody who's really, really bored next Thursday and knows where C-SPAN is on your dial, you know, if you need help falling asleep with your mid-morning nap, you might want to tune in. But this is something that, you know, I'm very honored to have the
very cool
opportunity to, you know, speak out on behalf of our industry and to speak out on behalf of veterans. So, and we're also going to talk about, there's going to be a lot of questions about the differences between the VA loan program and the FHA loan program, because remember, the VA home loan program is an earned benefit of somebody's service to our country. So as much as I love the FHA, and I do love the FHA, and we write a ton of FHA loans, I'm a huge supporter of that program as well, the VA should be a little bit more of a benefit, you know, because it's been earned in a different way. And so we're going to be on the Hill supporting this as much as we can. So, and then, Shannon, I'm not sure, I think, did we have one more slide or was that it? Yes. So, if you want to, you know, I'm going to be posting a little bit, you know, about how the actual testimony went, but also about the experience of going to Washington, D.C., and lobbying in this direct manner, testifying before Congress. So, you know, I'd love it if you give me a follow on LinkedIn. If you want to see how it goes, go to joinowen.com, sign up, and I'm kind of excited about it. So I'll be looking forward to sharing it with all of you.
That is awesome, man. Hey, some people are saying, and I think Jim's got his hand up, but I bet he's asking about this VA MI. Are you talking funding fee, or what are we talking?
Correct. They're trying to bring down the fees for veterans that have been judged disabled to a certain percentage, and or eliminate them altogether. Which the current act in front of Congress does. It just does it by. It's kind of like the robbing Peter to pay Paul concept. And we just want them to pay for it. What we have right now that's moving through is good, but we think we can do even better. And that's what we're going to be advocating for.
Okay. So, Jim, you got your hand up. Was that what you were going to ask about, or you got something else?
No, actually, I have something different. First, Owen, enjoyed your St. Patty's Day post and your outfit on LinkedIn. Very unique. But
one of my favorite days of the year. Thank you, Jim.
Absolutely. And here's the question I got. And you all know that, as gas prices go up, interest rates go up. Mm-hmm. But the interesting thing is, in America, we use less than 1% of the oil from the Mid East, and we're kind of self-sufficient. And it's kind of like when they say, the groceries are bad, your lettuce goes up, even the ones that are sitting in the grocery store. How come when no one's asked? We have this independence, and I'll let you answer that. But good to see you.
Oh, thank you, Jim. And I would just say this, the situation with the oil, we are not dependent on foreign actors for our oil. And if things really got into a war situation, you could invoke the War Powers Act. You could nationalize some of the oil companies. It's a much better place to be in than we were in previous years when we were more dependent. The reason why it goes up, though, is because if you're an oil company in Texas, right, and you're pumping and the price of the barrels go up, you got the opportunity to sell that to a refinery in the United States, and you got the opportunity to have somebody from Germany or England or Canada. Well, Canada's energy independent also, but some of these European countries or China or South Korea or Japan, they can call up and buy the oil as well. So if you're a producer in Texas, yes, of course, a lot of those people are patriotic. They want to support the United States, but they're also capitalists. They're publicly traded companies. They have shareholders. They have a fiduciary duty to maximize profit. So unless you see something like a declaration of war or something like that, or invocation of this piece of legislation called the War Powers Act, which I don't know if we're there yet to satisfy the conditions of that act, you're going to see oil go up. And but thanks for the shout out about the LinkedIn post. I had a lot of fun doing that one. It's about growing up in my very Irish cultured household when I was a kid. So
do you know the song? Owen, what's the song that you sing for every morning from you talking about to Catholic school when you grew up on St. Patty's Day?
Oh, which one? There were like 5 or 6 in my school.
No, it's like Mrs. Somebody.
Which one did you sing?
It was Mrs.
Oh, who put the overalls in Mrs. Murphy's chowder?
Yeah.
That's a real song, by the way. There's a real Irish song called "Who Put the Overalls in Mrs. Murphy's Chowder." When you find out, we'll yell it all the louder. But that's a different story.
Well, thank you for that input.
Yeah.
All right. Hey, we got Greg with his hand up. What do you got, Greg?
Quick one for you, Owen. The other week you were talking about the volatility in rates, and you said something about the average points being charged. And I was wondering if there's anywhere we can look and just be aware of the average points being charged on loans, because it seems like it's not 0 points.
No, it's not. It's most of them. Most of the surveys that I see, they're charging somewhere between 1.25% and 1.5%.
Yeah.
But if you go to the Freddie Mac survey, which is I think it's Thursday, Freddie Mac puts out a weekly survey, and it's really kind of a shame because they survey for a week, the week ends, and then they don't put the information out until a Thursday. So the information is anywhere from 6 to 11 days old when they publish it. I feel like we should get something more current now. But if you read the fine print in that survey, it usually talks about what the average or the median is for that week's survey. Usually around 1.25 to 1.5, but it can vary. You know, and it's always been above a point when I've looked at it ever since 2022-ish.
Wow.
So yeah, but just you got to like read the fine print.
Yeah.
You know, go beyond the press release, go to the actual survey and dig in. But it should be online somewhere.
Yeah, it just feels like such an easy point of showing our clients why we are clearer in our mortgage plan and the things we do, and just show, hey, these are things that other lenders gloss over, right? They're not telling you how they price these loans. So, all right, thank you.
Yeah, thank you, Greg.
All right, Brad got his hand up. What you got, Brad?
Yeah, Owen, you had a slide here that says mortgage demand plummets 11% as 30-year rate rises to 6.3. Again, I think Greg just hit on it. That includes loans that have closed with points. So when you're saying 6.3, it's really not like a 6.3 at 0 points, right?
No, it's like a 6.3 with a, point and a half.
So yeah, so we need to make the public understand that that's not really where a 0 point rate is. And in addition to that, wouldn't you think this calculation is from closed loans, which were likely locked 30 days ago? Does that make sense too? Or is this for loans that have been just recently locked?
So it's not loans that are closed. It's an applications survey.
Oh, okay. All right.
So it's loans based upon applications. So they've not yet closed.
Okay. Thank you.
All right, Joseph.
Yes, Joseph. Good morning. Good morning. This message is for Owen. I served in the United States Armed Forces, the United States Army for 31 and a half years. I'm a retired sergeant major.
Wow.
And part of that was
Joseph. Thank you for your service.
Thank you, Owen. And part of that was serving in the Army National Guard. And when I work with veterans that are currently in the National Guard or Reserve, and you probably know this, these veterans do not qualify for the VA home loan guarantee until they successfully complete 6 years of selective service. So my thought is, wow, it's kind of unfair. When we're discussing ways to reduce or eliminate the VA funding fee to expand access for veterans, we should maybe also, address the eligibility timelines for National Guard and Reserve members. 6 years is a long time to wait. Yet many National Guard and Reserve members are activated under state active duty in response to, emergencies declared by the governor, responding to hurricanes, floods, and other crises. In these moments, they put their lives on the line to protect our communities, right? This level 100%. Of sacrifice and commitment is real and should be recognized. Reducing that eligibility timeframe would, provide early access to home ownership, strengthen their financial stability, and better reflect the values of their service.
Yeah. Joseph, I agree with you 100%. Yeah. And, if you want, just type out an example of that or two, maybe email it to me. I'm pretty easy to find, Owen, Owen, at smprate.com. If you want to get in touch with Jen or Kristen, they have my email. If you want to summarize your thoughts and send it to me, I can maybe try to get it in. When you're a witness in front of Congress, you got to respond to the questions that are asked of you. So you don't have full control over, your advocation on that day. But if I can get that in, I will try.
That would be phenomenal. I mean, it's
wonderful.
And thank you again for your service. 31 years. My goodness.
Great job. Excellent work.
Thank you.
Yeah.
Yep.
Give the cheers. No problem. Wow, what a fun show today. What a fun meeting. Good stuff. Owen Lee, thank
how
you.
How long were you in, Frank?
6 years.
6. Good for you, man.
6 years active.
Yeah.
Right. So I never did reserves or anything like that. 6 years active. So, thank you.
We have an announcement to make about the slides.
Yes. Okay. Let's get to that. That's important. Go, Kristen.
All right. So we're trying to streamline this process. The new way going forward, and this is just how it's going to be. You're going to go to Owen's Slides with 2 S's in the middle there, owenslides.com, and you are going to download the slides from there. I know some people are saying, oh, well, my work is blocking this because it's a new website. I get it. Try your home browser maybe, but this is going to be like the easiest way for everybody to consistently be able to get Owen's Slides. So embrace the new process. Owenslides.com.
I have to apologize and admit my sins. A lot of times the gang on the LOBC is so nice to me, but I really should get my slides in by like 2:00. But a lot of times, like yesterday, I'm like, hey, Frank, Jay Powell is speaking at 2:30. I don't know what's going to happen to the market. I can't finish my slides till about 30 minutes after he walks out of the presser. So anyway, I'm guilty as usual. And I appreciate everybody's attention to the second step to try and accommodate me. So thank you very much.
I was not going to throw you under the bus, Owen.
Not at all.
It was all Owen's fault. No,
I need to lay down in front of the bus because I'm guilty.
Yeah. The other way we were doing it, sometimes if we don't have it by a certain time, it was just causing all kinds of problems. So owenslides.com, please embrace the new process. Try a different browser. If it's blocked on your end, try your home browser, whatever. And that's what we're going to do going forward for everybody to get the slides.
And we will also make sure
to apologies.
It's all good, brother. You don't have to apologize for nothing. And
wait, let him apologize. No, I'm just kidding.
So we will also put the link on the daily email that goes out. So today an email is going to go out and there will be a link, to get Owen Slides. And it'll be the link that owenslides.com is what will be there. You'll be able to download it from there. So good stuff. Thank you, Owen. Hey, man, awesome. Congrats. Right, and we'll figure. Oh, yeah. If you want to do a different time, a different day next week, that should be just fine. So I'll reach out to you. We'll figure that out. Good. Yeah. Maybe we can do Wednesday, unless no, we can't do Wednesday. Your cohort, Kevin, he occupies Wednesdays for the next 2 Wednesdays. So maybe we'll do Tuesday or something like that.
Smarter and more well-spoken than I am.
But he's not as good of a dancer. That's what we've heard. Mm-hmm. So at any rate.
Wait. I'm gonna need to see some proof of that.
Yeah. Well, they'll have to send in their videos.
That's a whole different show, Kristen, and it's not family friendly. So we'll talk about that offline.
All right. Owen, thank you so much, brother. We appreciate you. It's a blessing to have you, man. Thank you for all you do.
Thank you.
Best of luck to you on your congressional meeting there. That's going to be super cool, man. Yep. And can't wait to hear how it goes. Everyone. You guys have a good one. All right. Hey, for the rest of you guys, have a great day, man. Let's go get him. What do you say? We'll be here tomorrow. Chris Johnstone, you want to give us any preview, Chris, for tomorrow at all?
Absolutely. I discovered something with AI this week on how to get better, more custom responses for everything that I produce. So
no kidding.
Give away the top 3 things that you need to do with your AI to get better, more custom responses on your output.
Nice. I dig it. Looking forward to that. That'll be cool, man. So don't miss tomorrow. All right, guys, let's go ahead and get on out of here. Have a great day. We'll see you here mañana. Chris Johnstone. Adios, my friends. See ya.